Hello and welcome to this webinar on our pathway to homeownership. I am Sepide Karimizianani, the Senior Business and Housing Program Associate at San Pablo Economic Development Corporation. Before we get started, here are a few housekeeping items. This webinar is being recorded. A recording will be available on our website. Any resources mentioned during the presentation will also be available on our website. All attendees are muted. If you are having any issues with the audio, you may need to click on the webinar screen to enable audio. And we welcome questions, so please use the Q&A box located at the bottom of your screen to submit questions, and we will answer them at the end of the presentation. So the mission of San Pablo Economic Development Corporation is to act as the catalyst for equitable economic opportunity. We offer workshops, training, and classes for businesses, entrepreneurs, and individuals. To support advancement, we focus on employment training and support, business resources and access to capital, and homeownership, which we are going to discuss in this webinar. This webinar was possible with the help of our wonderful partner, May from Guild Mortgage. We are grateful for her partnership and collaboration with us. Now I turn it over, May.
Hi, everyone. My name is May from Guild Mortgage. I am a mortgage loan officer, and today I would like to discuss about how important to have a good credit and what are the benefits of having a good credit versus bad credit. So, and also on top of that, I will also discuss the home buyer process. So I don't know if anyone here is interested in home buying, but if you can put in the chat, what's the reason? What do you want to know with this webinar? That'd be great. So that way, before we end this webinar, I can give you, or I can answer those questions for you. So go ahead, Sabine, next slide, please. So today's agenda, we will discuss about how the credit score is being calculated, because a lot of people, they're asking about like, okay, so if I have all this credit, is my credit would be better? So there's a lot of questions how to obtain a good credit. So with this webinar, we will be able to find out, we will break it down for you, the different types of how many percentage in order for you to get a good credit. So next step. So if you look at in this presentation, this is how they calculated your credit, your credit score. So if you look at in the increase, it's 10%. So what is that? So let's say you go to the store, you open a credit card, or you get a car and then they run your credit, you buy a house, they run your credit. So that, when those are the credit increase that they talk about this. And this is based on a 10%. So they take 10% of that one and they stay for, usually they stay for 2 years. And then mix of credit types, which is about 10% as well. And mixed credit types, those are the car loans, credit cards, personal loans, signature loans, home loans. So they take 10% of that one. The next is the credit history, 15% of that one. So what is that meant is, so let's say how they want to know how long you have your credit for. So of course, if you have a credit, you just recently open it and then you have it for 2 years versus 20 years and then they're paying on time. Of course, you would know that they have a better credit compared to the new one, even though they are paying on time, because that credit history, 2 years versus 15 years. Now is the payment history. This payment history, if you look at it, it's 35%, right? So they want to make sure that you are paying on time. Because when you're lending someone, you don't know that person, right? So when you don't know that person, you're lending them money, you're giving them, let's say, $10,000. But if you don't have a credit score, you don't know what their data on their credit report, you don't know how well they will pay you. You don't know that. And that's why they put 35% on that one, because they want to make sure that you are able to pay your debt. And the next one is the outstanding debt. So this one is the way they explain it, okay? So let's say you have a 10,000 credit limit on your credit card. And then you use 90% of that one. So from 10,000, your balance is 9,000. So a lot of people, what happened is that's the reason why their credit is lower, even though they have mixed type of credit, because most of the people, they maxed out their credit card. So if their limit is only 10,000, sometimes you would see their balance with 9,000, 9,500, 8,500. So that's more than 30% of what they're supposed to owe. And that's the reason why, that when they take that, it's like, oh, okay, so this one, they max out their credit. And when you're trying to apply for something, when they look at your credit, they pull your credit, it's hard for them to lend you money. They would decline your application, because if they look at it, your credit, your outstanding debt is above 30%. So they think you need money, that's why you're borrowing. So they think, this person is maxed out, so now they're borrowing again. So most of the people, they decline it, and that's for that reason. Next slide, please. So why is it important to have a good credit, or to obtain, or at least, to your goal as a person to have a good credit? It is important because when you're buying a house, when you're buying a car, it's very important, because then, when you don't have a good credit, more likely it's hard for you to buy a house. Or if you can get an approval, usually they give you a higher interest rate. It's the same thing with a car, or it's the same thing with when you're trying to borrow for your education. So they give you a higher interest rate because of your credit. Next slide, please. So there are 5 steps to better your credit, right? So the first step is you want to make sure that you review your credit once a year. You check for errors, because sometimes, what if your social is not correct? What is your name? Your address is not correct. So because those information, they are on your credit. So you want to make sure that they're giving you what you have on your credit report is correct information, so that way you can dispute if anything that it's not there. So the next one is negotiate a settlement with creditors if applicable. So these are the collections. I don't know if anyone here knows that when you have a collection, you can negotiate. You can just call that collector or that lender who put you in collection and just negotiate with them. So if, let's say, you borrow 10,000, you're in collection for 10,000, and sometimes when they send you to collection, that 10,000 is not 10,000 anymore. Sometimes it's like more than that, because they have interest in it, right? So what you can do is you can call that collection, you can call that creditor, just tell them, it's like, hey, I would like to settle. I can only pay $2,000 versus $10,000, and sometimes it works. And then they'd rather get the 2,000 or the $5,000 instead of the 10, or instead of nothing, right? 0 versus nothing. So the next one would be pay off all past due balances. So if you have past due, make sure you stay current, because every time, even though you're making payment every month, it doesn't do any good if you have past due, because it's just consistent, even though you're making payment every month. But if you don't cover the past due, it's still reporting on credit bureau that you are past due. So it's not current. So make sure, it's current, so that way it doesn't affect your credit. Avoid new credit cards application and large purchases. So this one is, you don't want to get a lot of inquiries. You don't want to apply for a lot of credit cards all at the same time, because every time you apply, they run your credit. And of course, when you run your credit, remember that inquiries that we talked about earlier. So they take that, it's a 10%. And now if you apply for a loan, and then of course it's adding up, right? So, and then, but if you keep applying, then those encumber, and then it doesn't look good with the credit bureau. And the next one is pay your future bills and debt on time. So this is what we talked about earlier, that you want to make sure that you pay on time. Avoid any past due, because it doesn't do any good to you. They charge late charge fee, and then at the same time they report that every time you're past due, they report it 30 days, 60 days, or 90 days. Those are really bad with a credit bureau, and they stay there for a long time. So make sure, if you take care, if you look at this, remember these 5 steps, and then I guarantee you, your credit, you would see an improvement on your credit. Next slide, please. Next slide. So with the credit, with improving your credit, do you have any questions? Please put it on the chat, because I want to make sure if you have any questions how to build your credit, I want to make sure that I can discuss that with you, because the next slide that I would like to talk is about the home buyer process.
Hi, can I say something about that? It's showing that the chat on my end is disabled.
Okay.
Thank you.
Yes, please feel free to just unmute and ask your questions if you have any question.
Yeah, do you guys have any question?
I actually did.
Yeah, go ahead.
We we're really close to, being able to buy a home. But I think where we're trying to get to is the goal, because we do have high consumer debt. And
Okay.
so we're just wanting to know how to calculate to get to the point to where we will qualify for a home, because instead of just, stressing ourselves out thinking
Right.
we have to get to a zero balance, we'd like to know where we could get to, that point to where we'll qualify and, with the debt we have.
Yeah, it's a good question. So it's a good question because a lot of people, they're asking us like, hey, May, can I apply now? This is my debt. But you don't even know what their income, right? So you don't know their credit. So as a loan officer, I always tell, okay, so I don't have to run your credit. If you want, after this webinar, how do you say your name?
Dorina?
Dorina. Okay, so after this webinar, give me a call. I will give you my information. I can talk about your situation. So that way we can run the numbers instead of, telling everyone what the situation, right? But, I am glad to give you that advice. After this webinar, my information would be at the bottom of it. Write it down, give me a call, or I can get your information from Sepid as well. So we can talk about it and then I can help you with that.
Okay,
Does that
thank
sound
you.
good?
Yeah,
Yeah.
great. Thank you.
Yeah. No, I like that because a lot of people, they want to try. Trust me, I have a buyer that she didn't thought that she can afford the house because of her credit, or she doesn't have a lot of savings. She didn't know, but we were able to make something for them. We were able to help them, and then now they are homeowner. So imagine those informations that's not given to people. They're not educated. And a lot of people, they're scared because if they have a credit score of below 650, they think it's like, oh my God, I don't think I can get an approval on this one. So the home buyer guide, I'm going to discuss it with you because I had a feeling that those people who sign up for this, they're probably interested in buying a house, right? If it's not today, maybe in the future, they're thinking about it, right? Because renting it's good for the meantime, but if you're renting for like 5 to 10 years, imagine that money that you wasted.
It is. I agree.
So, and rent, they keep going up. They keep going up. So I have an apartment before, it's only 890. And now what? After 10 years, what is it? They're probably renting it for almost $2,000. So, and this is the reason why we hosted this home buying seminar. So that way we can help our community. We want to help them to become a homeowner. If they're not ready today, I want to prepare them for the next one. So that way we can prepare them, we can prepare them to become a home buyer. All right. So any other questions? I'm going to discuss the home buyer guide if nothing. And then if you have a questions, type it and then type it there. Please feel free to interrupt me and then I will answer those questions.
Sure.
Okay. So the home buyer guide, right? If you look at it, the home buying process, your first step is to complete an application. Do you know why you have to complete an application first? And I'm telling you, all my home buyers, I don't do an application right away. And the reason why, I want to make sure what their situation first. Like, what do you think is your credit? what do you think is your income? I can do manual calculation where it's like, oh, maybe we're not ready yet. So let's wait maybe 3 more months, 6 more months. And the reason why I don't take an application right away is because I don't want to ding their credit. I want to make sure if I'm submitting an application, we have a chance. And then the next one is, and you want to get to complete an application so that way the underwriter can review your file. You want to make sure that your income is verified, your credit is verified, your down payment is verified before shopping for a house. A lot of people, they do it backward. So what they do is like, okay, so I see this open house, I want to go there. They're selling it's really nice and I want to put an offer. You put an offer without an application, no one's going to accept that because you haven't submitted an application. They don't even know if you have money for a down payment. They don't even know what your credit is. So a lot of realtors, they don't want to waste their time to accept an offer without a pre-approval. So that's the reason why we tell people, we advise them, hey, submit an application, talk to loan advisor first, so that way you would know how much is your pre-approval. So with the second one, it says get a pre-qualified for a ballpark loan amount. So like what I said, if you see a house, it's 500,000, you want to know what your monthly payment on that one, right? Because you might like the house, but you think it's good amount, but when you learn about the monthly payment, maybe it's not for you, right? So that's why you want to make sure that one is, I always emphasize, like, get a pre-approval, talk to your loan officer, ask them how much you can get pre-approved, what's your comfortable payment, because if not, then you're probably putting an offer in a house that you don't even want to live in it, or you can't afford the payment. So the next one is, of course, you have to provide. So once you submit an application, they will know how much you can pre-qualified. And then the next step is you provide your financial information, like your income. So when you applied, if you're self-employed, that's when we need the tax return. If you're not self-employed, I don't need a tax return. All I need is 2 latest pay stubs, W-2, and then your 2 months bank statement. That's it. Pretty simple. No tax return. So the next one is once you provide the information, the underwriter review your income, your credit, they review the entirety of the loan, then you are pre-approved for a specific amount. So once you receive that pre-approval letter, that would be your ticket to look for a house. Now you can find a realtor, or I can connect you with a realtor, and then it depends on your area. We will give that pre-approved letter, so that way you can go ahead and check a house and put an offer. So if you look at it, it says hire a real estate and then sign a sales contract. So when they put an offer, they accept your offer. Now you are in offer. Then you can sign your disclosures, and then you do the inspections, and then you do the appraisal, and then you put your earnest deposit, which is the EMD. And then once you find the appraisal, once you're good with the appraisal, then you can close your loan. Did you know that you can close your loan within 25 to 30 days? I've been closing my loan within like 21 days, 25 days. So you can be a homeowner. And the first step is just get a pre-qualification. Talk to loan advisor. That would be my advice. So a lot of people also are asking, like, hey, what credit do I need? I don't have a good credit, so I don't think I can qualify for a house. Because a lot of people, they think it's 700. Who's in this chat, who's in this webinar, who think that 680, 700 is the minimum score to get a house? Please, I would like to know if you can put it in a chat. So if you look at it, like, you're conventional, do you see this? Look, it's 680, right? But it's not 680. Do you see it? I don't know if you can see the slides, but look at this conventional, 620. And then your VA, and then the VA and FHA is 540. On the 540 and FHA, though, you need at least 10% down. Now, if you only have 3.5%, you can your credit needs to be at least 580. And then for jumbo loans, look at this, they're like 660, but with a 10% down payment. So it's not too bad, right? If you look at it. So there's a lot out there if you don't talk to your loan officers, or if you don't do your research, you might be waiting, but you're probably ready. You just don't know because you didn't talk to anyone. Next slide, please. Okay, so this one I would like to talk about when you are in contract or when you are ready to buy a house. So once you submit an application, please, as an applicant, so these are the do's, right? So make sure your employment and assets is correct on your loan application. It's important because we will do a verification of employment once we submit an application. And then next one is be prepared to account for non-payroll deposit into each account you plan to use toward your transaction. So that means whatever you're depositing into the account, so make sure they are sourceable. Because you might be putting 5,000 cash in there. And then when I call you, it's like, hey, where's this 5,000? Oh, it's like, it's under the mattress. I can't verify that. Unfortunately, I can't verify that. I need a receipt. Where is it coming from? For us to be able to use it for your down payment or closing costs. And then respond to any request from your loan officer promptly. Because when you are in contract, we only have 30 days to close your loan. So with that being said, if I ask you like, hey, can you sign the disclosure? Make sure you are signing the disclosure. Hey, I need a pay stub. Make sure you provide those information. So that way it doesn't delay your process. And then continue to make payment on time. So that's pretty simple. And then don't. Okay, so this one right here. So when you submit an application and you are in contract, please do not apply for any new credit. Do not co-sign for any loan officer. Do you know why? Because we already review your income. We qualify you based on your credit, based on what you owe. So imagine if we are in contract, you end up buying new furniture, and then you pay, like, you finance $3,000, and then now you have like a $100 monthly payment on that one. What if my pre-approval? What if your pre-approval is on the border? What do you think is going to happen? So if I put that $100 extra now that you apply for a new credit card, I might not be able to get you an approval because you are now over your limit. That's why we always tell them, do not apply for a new credit, do not co-sign for anyone because it will affect your pre-approval. Don't have any inquiries made on your credit report. So don't be applying, don't have anyone running your credit, because then I have to source it. It's like, what did you do? Why did you run? Because at the end of the transaction, I have to do a soft pull on your credit to make sure that you didn't inquire anything, you didn't purchase anything. Don't raise red flags to the underwriter such as co-signing. So this one is it's together with the number one. So avoid co-signing. So make sure if you apply, that's it. Leave your credit as is, because we're gonna review it. And like what I said, if you want to co-sign or if you want to buy something after we close your loan, that's fine. But wait for until you get your key. And next one is, do not change your job, because like what I said, we approve you based on your current situation. What if you change your job and then your income is not the same as the other one? So that changed the whole thing, right? Then I'm gonna have to restructure your file to see if I can get you an approval. And lastly would be, don't spend your closing costs. So if you set aside money for your savings, don't spend that. And if you have extra, that's fine, leave it there. And after you close your loan, after you got your key, that's when you go ahead and spend your money if you want to spend it. Next slide, please. I think this is a 30 that's good. A lot of information, but I'm willing to answer all your questions that you have.
So thank you for attending our webinar, and once again, thank you to our partner, May. We hope this webinar provided you with valuable information. This recording will be available on our website, as well as some of the information and resources that presented today. Please feel free to contact our presenter with any questions that you may have. Now, if you have any question you want to ask, please unmute and ask. Yes, please go ahead, Rachel.
Yes. So should I see you once I have my down payment saved up, or should I just make an appointment and talk to you ahead of time to prepare to if I need more? My credit rating is pretty strong. It's in the mid 700s. So
Are you trying to save money for the down payment, Rachel? Is that what it is?
yes.
Okay. You know what? We have a lot of down payment assistance. If that's your concern, let's talk. Let's talk
Okay.
first before, maybe you don't need to wait. Just you have my information, and then Stephanie, if we can get her information as well, like phone number and email, so that way I can reach out to them. So that way, if they have any questions, I can just talk to them on the phone. It's easier when we talk individual because they have,
Okay.
I don't want anyone to know what the others people's business.
Okay.
But Rachel, I can give the advice. If that's
Okay,
what you
great.
choose.
Thank you very much.
Yeah. Yeah, of course. All right. Anything else?
Are you available to meet after this Zoom?
Yeah, give me a call.
Okay, this phone number that that you just
Yes.
posted for your information. Okay, I'll give you a
Yes.
call.
All right.
Thank
And
you.
Rachel, yeah. And Rachel, if you want, after I speak to Dorina, I'm only available until, let me see, until 6 o'clock. So if you're available tomorrow, send me a text. That's my cell phone. What's your availability? I can check my calendar for tomorrow. I don't have much. I don't think I have a lot going on for tomorrow. So text me if you're available. I'll put you on my calendar so we can talk about your situation.
Great. I'll text you. Thank you.
Got it. Bye, guys.
Thank
Bye-bye.
you. Talk
All
to
right.
you.
Thank you.
Thank you, Sabide.
Thank you.
All
Thank you,
right,
everyone.
bye.
Goodbye.
Bye-bye.
Bye.